I've got the 4 portfolio managers with me. On my right is Jacques Conradie. Jacques, our CEO. Justin Cousins is the director and PM. Dave Fraser is our co-founder and chairman, and then Simon's also one of the PMs on the team.
I think I'll start with the fact that how all of us see the job we do here. And I guess that the key difference from me is that we are super passionate investors that don't really see this as just another job. Investing is my obsession, and if I wasn't working here, I'd just be managing my own money and following markets. It's what we love, and I think that's what we look for when we bring someone into the business. So if you start with that, you get to a very different approach to managing funds. We effectively see the funds as managing our money, our own money, and managing clients and your money next to ours in the fund. That's what we want to achieve here.
Going back to the 80s and 90s, myself and Clive Yates, my other co-founder, were portfolio managers at Liberty Asset Management, which in those days was a pretty well-respected investment firm in Johannesburg. And certainly there was some management turmoil at the time, and both of us sat down and said, well, let's look to perhaps do our own thing here, but let's look to take the good things out of a institutional environment and replicate them in our business, and leave the things that we didn't enjoy, that were diversions, that were negative energy behind.
Historically, for the last 9 months, we've been sitting on very, very low levels of overall market exposure. I think that's informed by the fact that we are very concerned about the overall macro environment that we see. So, I mean, you're all aware of the fact that inflation is now spiking and is at the highest levels that we've seen in probably 40 or 50 years. And that comes with increased interest rates. And increased interest rates obviously impacts, firstly, consumers, but then impacts the earnings of companies, particularly companies with debt on their balance sheet. So the overall market outlook or environment is particularly poor at this point in time. We've already seen big drawdowns in the market, and despite that, I don't think we're particularly excited to materially increase our net exposure at this point in time.
What you've seen recently is there's been a clear disconnect between the macroeconomic and what we're hearing from companies on the ground. So in the current environment, what you would expect to happen is rising inflation, rising interest rates, consumer discretionary spending coming down, and consumer sentiment coming down, which negatively would impact the retailers eventually. But speaking to the retailers on the ground, that doesn't seem to be the case at this stage. So we had a conference last week in Cape Town where we spoke to most of the retailers, and all of them are saying that the consumer is actually still performing reasonably well.
I think it's also quite significant that you have your own capital invested. I think that's can't be underestimated.
Very, very much agreed. Like I think you come in there and you said, this is how I want my portfolio to be set up. I don't want to lose money right now. I think the opportunities will come. Let's be defensive. I think it's a different mindset.